Hi there, welcome to GrainTV. It's Tuesday, December 2nd. We had a sell-off, especially in the soybean market, where we lost 21 cents a bushel. Corn was a distant follower at 8-cent losses, while wheat suffered only a 3-cent setback. Cody, we suffered quite a hit today in soybeans, penetrating below that $10 mark. Is the bear market back in force now?
Well, I think, I think if it's not, it's awfully close. This really looked a lot like last Friday's move when we sold off here after the Thanksgiving holiday. Today, I think this kind of confirmed. We broke down below this neckline on the chart. Take a look at the daily chart here. Each one of these bars is representing 1 day worth of price activity. And you'll notice really since the beginning of November, this pattern has been forming. I've been slightly bearish this thing, and sometimes it has moved against me in the last month. But I have been bearish here because there's some fundamental reasons. One, I think that the tight supply that we've had that has propped up this soybean market is starting to be alleviated with harvest being wrapped up and with some of those demands, particularly in soy meal as well, being met. When we have that sort of tightness in supply being alleviated and we're starting to switch our attention over to South America, down there it's not bad enough to really warrant a big risk premium. That to me makes the soybean market particularly vulnerable. And this chart pattern here starts to really kind of confirm that in my mind. Here we're seeing a head and shoulders pattern. The first shoulder in the beginning of November, we tried to make new highs. We were able to do that by the middle of November. And then we made one last attempt. And really that last attempt kind of peaked last week. And then we started trading lower here. And now we're down below $10. I think if we get down below $9.91, if we break down below that, we will have broken the 50-day moving average. We will have broken the previous neckline support on November 4th. I think that would be a very, very bearish signal here. And I think it's very possible that soybeans could start moving toward the lows here.
Right, and that's what we've been thinking about for some time, and the market's given us a bit of a correction here, if you will, that we've moved higher because of the tightness in soy meal, but now we may be coming back for some more testing of low $9 here in the future.
Absolutely, and of course corn also showed a lot of weakness here today. Kevin, what's your thoughts on corn?
And in corn, we did see some weakness, obviously following on the backs of the soybean sell-off, but really, in corn, people are looking at the collapse in oil prices, and obviously that translates into lower gasoline prices. And the question is being asked, can ethanol continue to have such strong production in the face of likely falling ethanol prices? And so, as I've been talking about, every week for the last 4 weeks, we've set new marketing year highs in terms of ethanol production. Tomorrow we'll get new data for the last week. I don't think it'll show us a huge setback by any stretch, but I think the bears have to be somewhat right here that there is the potential for lost demand from corn use going into ethanol with oil prices collapsing. So that's certainly a potential negative down the road. On the basis front, though, we did see strong basis moves today, especially around river terminals. Not so much on ethanol plants, but we did see a nickel to a dime improvements, especially along the Mississippi River, that is not closed by the freeze up north in Minnesota. So we are seeing some strength in the cash market as the futures is selling off. So there is some underlying support there still for demand for corn.
Absolutely. And when you look at the chart here for corn, it's not as defined, it's not as exaggerated here as soybeans. You don't have this big head and shoulders technical pattern here that oftentimes signals a major reversal here. But I think, as you had highlighted, I think there is going to be maybe some pressure on corn here going forward, especially with crude oil having traded off so sharply here on the back of that OPEC meeting. Other than that, guys, thanks a lot for tuning in. I appreciate it. You can visit our website at grainhedge.com and take a 14-day free trial. You can see what it's like to have a mobile trading platform and quotes on the go. Thanks a lot for tuning in. We'll see you here Wednesday for the Ethanol Outlook.